So in yesterday's session we have discussed about how to calculate interest on capital, interest on drawings. Okay, in today's session we will be seeing how to calculate this interest on drawing. This question was given as a homework for you, interest on drawings calculation. Okay, so what is the B part of this? Let us discuss this B part. So middle of the quarter for first 3 quarters. So see, drawings are at the middle of the quarter, but drawings are only for the first 3 quarters. That means in the last quarter there were no drawings. Okay, so first drawings. So first drawing, what is the date of first drawing? Middle of first quarter, that is April, May and June. So it comes to 15th May 25. Okay, and last drawing is in the third quarter. Okay, only 3 drawings are there. So last drawing is in the third quarter. So April, May, June is the first quarter, July, August, September is the second quarter, third quarter is October, November, December. So October, November, December. So November is the last quarter. So if you see here, from June, from May 25 to 31st March 26, if you see how many months, it is 10.5 months, that is 10.5 months. And from last quarter to 31st March 26, so November half month, then December, Jan, Feb, March, correct? So 4.5 months, correct? 4.5 months. So now if I take a average period over here, average will be 10.5 plus 4.5 divided by 2, correct? So it comes to 7.5. Average period is 7.5. Now I will be using this to calculate interest on drawings. Okay, so interest on drawings is your total drawings for the year. So total drawings for the year is, see, 7,000, same amount is withdrawn. Okay, so 7,000 is withdrawn for 3 quarters. So 7,000 into 3 into rate by 100, 36 by 100 into 7.5 by 12. So if you solve this, you get 4725. Now, no doubts, right? Now, so we have seen what is the interest on drawings, how to calculate the interest on drawings. Okay, now what we will do is, so rent payable calculation is easy. Rent payable calculation is nothing but they will be giving you what is the rent for the month. You just have to write the amount. Okay, there is no calculation involved. Again, partner's salary also, they will directly give you the amount. You have to just calculate it. Monthly salary they'll give, or they'll give the annual salary. Okay, so there is no calculation as such. Then partner's commission. Partner's commission has a calculation, but before doing partner's commission, let us understand the closing entries for each and everything. Okay, remember we had kept this closing entries pending for everything. Let us first do the closing entries before doing calculation for partner's commission, because we have to understand what is the profit and loss account and what is the profit and loss appropriation account, okay, to understand partner's commission calculation. So let us understand this new concept now. Charge against profit, okay, or charge of profit and appropriation of profit. It is also known as charge against profit. Okay, the one more word is charge of profit or charge against profit, and appropriation of the profit. Now the meaning of the word appropriation is distribution. Okay, now keep your pen down. Let us first understand the concept. Okay, now let's say this is you. Okay, so you have graduated, okay, and you got a first job. Okay, now let's say your annual income just an example, your annual income is rupees 5 lakhs, okay, per annum. Now for job you are moving to a different city, okay, you are not staying in the same city as your parents stay, you are moving in a different city, okay. So now what you are planning to do is, see, when you move into a different city, you will be bearing all the expenses, correct, all the expenses whatever are required. So you will have different expenses to bear, like your mobile expense, then your rent, okay, then food, correct, then travel. Travel is travel to the office, or occasionally you will be traveling during vacation and all, you will be coming to home and all those travels, okay, you will be incurring all those expenses. And what you are planning is, since this is your first job, at the end of 1 year, okay, you will be gifting something to your parents, okay, you will be gifting something to your parents. Now cost of all this, let us assume cost of all this is rupees 20,000 per month, okay. So for a year the cost will be 20,000 into 12, so it comes to 2,40,000. So you are estimating that at the end of the year you will have, let's say there is no tax, income tax, so you will have 5 lakhs is the amount that you have earned, minus 2,40,000 was your expense. So balance amount, that is 2,60,000. You will have 2,60,000 at the end of the year, and this you will be distributing, okay, you will be getting some gifts to your parents, okay. So that means you are distributing this to your parents among yourself, okay. You will keep some portion for yourself, and then rest of the maybe 60,000 you will keep it with you, and then whatever is left over, that is 2 lakhs, you will distribute it to your mom and dad, you will get them some gifts at the end of the year. Now see what is happening over here. Now here these are your expenses, okay. Now whatever expenses you are incurring, they are not optional, okay, this expenses has to be incurred. Let's say if this expenses, if whatever expenses of 2,40,000, your actual expenses was 3 lakhs, okay, then you have to incur these expenses, okay. Then now whatever is left out, that is 5 lakhs minus 3 lakhs, this 2 lakhs you will be distributing it among yourself as a family, that is you will keep some amount with you, and then balance you will get some gifts for your parents, okay, understood. So understand one thing, this expense of 3 lakhs you have to incur, there is no option, okay. But when it comes to distributing your excess income to family, it will depend on whatever is left, whatever amount is left over here, okay. So these are your expenses, and these are your, this is your distribution of income, okay. So this is known as appropriation, that is distribution. So same way, okay. Now same way, okay, parallelly whatever example we have taken, now we will take it for the firm also. So instead of you, I am considering a firm over here, that is a partnership firm, okay. Now partnership firm is earning some income, partnership firm will be earning some income, okay. It will use this income to incur some expenses, okay. So once the expenses are incurred, whatever is left, okay, that will be distributed to partners, okay. These are partners, that will be distributed to partners. Now see here, pay attention over here. Now if you, whenever you say expenses, okay, expenses include all your expenses, all outside expenses, that is your purchase of goods, then your electricity expense, mobile expense, everything. You remember whatever you used to consider in your P&L account last year, trading and P&L account, all those are expenses. Your bad debts, okay, all those are your expenses. Now when it comes to distribution of profit to the partners, see, expenses will include your expenses to outsiders, okay, then provisions, okay, then rent to partner. Rent to partner is also an expense. You don't have an option to not pay rent to the partner, okay. Rent to partner is not a distribution of profit, because partner has given you that land, that particular premises, office premises or land on a lease, and firm has to give rent to the partner, okay. So rent on the partner, rent to partner, and interest on loan by partner. So as far as partner is concerned, these two payments, that is rent to the partner and interest on loan by partners, are considered as expenses. They are not considered as appropriation of the profit, okay. Whereas other expenses, that is partner's salary or partner's commission, okay, or your interest on capital, okay, then profit distribution, all this comes under appropriation of the profit, okay. So this expenses will be recorded in your profit and loss account, and then from here you will be taking forward your profit or loss to your profit and loss appropriation account, and your profit and loss appropriation account will have all these expenses. That is the reason whenever we have said partner's salary, partner's commission, interest on capital, okay, I told you they have to be treated like expenses. They are not expenses. Whereas rent paid to the partner, interest on loan by the partner are your expenses. Whereas all this is like expenses. They are not actual expenses. But for applying debit credit rules, they will be treated similar to expenses only. Okay, so from firm's point of view, it's a distribution of the profit. If there is no sufficient profit, then we won't be giving any partner salary. Say, let's say after this your profit and loss is 0, okay, then we won't be giving any partner's salary, partner's commission, interest on capital, or there won't be any profit distribution. Or let's say if there is a loss, then also we have to bear all these expenses. This is compulsory. But all this is not compulsory. Subject to availability of the profit, this will be given to the partners. Did you understand this? Any doubts here? Okay. So now, let us understand what is the difference between the two. Okay, charge against the profit or charge of profit, and appropriation of the profit. So nature is all the expenses. This is a expense, correct? And whereas appropriation of the profit is distribution of profit among partners. Okay, it can be in the form of commission, salaries, okay. Then here recording charge against the profit is recorded in profit and loss account, and appropriation of profit is recorded in profit and loss appropriation account. Okay, now what are the examples here? Examples will be all expenses paid to outsiders, okay, plus provisions, that is provision for bad and doubtful debts, provision for discount, whatever we used to do it last year, no, all that will come in your profit and loss account only. Now what else additional we need to remember is partners related. So partner related, what all will come in the profit and loss account, what expenses will come in profit and loss account? Your rent to partner and your interest on loan by partner. So interest on loan by partner is also an expense and it will be taken to your profit and loss account. Okay, now remember here one more thing, this is not an expense but we will just write it. Interest on loan to partner is your income. Okay, so is income and it will be on the profit and loss account credit side. Okay, now let us understand this examples. This examples is what? Partners salary, partners commission, okay, then share of profit, interest on capital, okay, then if there is a interest on current account, interest on current account also will come over here. We'll learn what is how to calculate interest on current account. It's similar to capital only, okay, nothing much in that. So we will learn it. So calculation, everything is same. So interest on current account. Now interest on drawings, okay, is like income. Remember the word like income. But again it belongs to the partners. So it will go to profit and loss appropriation account credit side. Okay, so easy to remember, right? Only rent to the partner and interest on loan by partner and interest on loan to partner will go to your profit and loss account. Rest of the things will go to profit and loss appropriation account, partner related. Okay, just write this. Now next page. So we will just see a format of profit and loss account and profit and loss appropriation account. Okay, let us understand profit and loss account and profit and loss appropriation account. Now see here, we have already seen in trading account whatever we have done last year. Trading account, you take opening stock by closing stock, purchases, sales, direct expense, and you calculate the gross profit. So from trading account, your gross profit is transferred to your profit and loss account. So remember, in profit and loss account, credit side you will be recording all the income and profits, and debit side is for this is only for profit and loss account, okay, expenses and losses. Correct? Your trade same, I mean all your accounts in which you calculate types of profit, like profit and loss account, then your trading account, profit and loss appropriation account. This is what is the rule. So all incomes and profits will automatically come on the credit side and expenses and losses will be on the debit side. We used to do that, right, last year also. So if it is a gross profit, it will come over here. So by gross profit brought down, okay. If it is a gross loss, then it will come over here to gross loss brought down. Okay, once you bring in the gross loss, in profit and loss you used to take other income. So if there is some other income like income on interest on investment, okay, profit on sale of asset, all that will come on the credit side of profit and loss account. Okay, then expenses and provisions. Okay, so all other expenses, two outsiders. I am not listing down all the expenses over here. It will be two outsiders. Example, bad debts, electricity. Some examples I'll just list down. Then your depreciation. Okay, all these expenses, whatever expenses are not belonging to partners, okay, paid to outsiders, whatever we used to take it in the profit and loss account last year will come over here. Now let us see what income and expenses, partner related income and expenses, that will come over here. Let us see that. So whenever whenever the loan is given to the partner, interest on loan to partner is a income, correct? So what will be the transfer entry for that? Interest on loan to partner account debit to profit and loss. So by interest on loan to partner, this is important, this is to partner, okay. Whereas here what will you have? Partner related to rent to partner and to interest on loan by partner, correct? Why loan by partner? Because when partner has taken loan, when the firm has taken loan, we will be giving the interest to the partner, whereas here partner has taken the loan, so interest will be given by partner to firm. Okay, once you calculate all this, you will be getting a total of debit and credit side. If credit side is more, then you will have to net profit, correct? Now this net profit will be transferred to profit and loss appropriation account. Okay, this is net profit, whereas if it is a net loss, it will also be transferred to profit and loss appropriation account by profit and loss appropriation account. This is net loss. Okay, so net profit will be transferred over here, and if it is a net loss, it will be transferred over here. You already know that, right? Same thing, whatever we did it for trading to P&L, correct? So by P&L account, this is for net profit. If there is a net profit, and to P&L account if there is a net loss. Okay, now other partner related expenses will come over here. For example, interest on drawings. Now interest on drawings is given by partner to firm, so it is like income, correct? So what will be the entry? Interest on drawings account debit to profit and loss appropriation account. So by interest on drawings, okay. Then interest on capital is opposite of that. It is given by firm to partner. It is like expense. So to interest on capital. Then partner's salary, partner's commission is also given by firm to partner. So we have to transfer it to debit side of profit and loss. It is like a expense only. Partner's salary to partner's commission. Okay, now there will be some interest on current account also. Okay, when I say here you have to include capital account also. If there is some interest on current account, even that will come over here. Okay, if firm is paying interest on current account to partner, it will come over here. If partner is paying to the firm, if the current account has a debit balance and partner is paying interest on current account to firm, it will come over here. Okay, by interest on current account. If current account has debit balance. This is important. Okay, now once this is done, there will be something known as reserves. Reserves we created from your profit and loss appropriation. Reserves is what? Some part of profit you set it aside. Okay, you set it aside for your future expenses. Okay, now once this is done, you take a total. Okay, you take a total of everything. Okay, and then whatever is the balance profit over here, we will be distributing it to the partners. Okay, to partners, capital or current account. If it is a fixed capital method, then current account. If it is a floating capital method, then capital account. Okay, so partners capital account, profit, remaining balance profit, we will distribute it in their profit sharing ratio. Did you understand this format of profit and loss appropriation account? Okay, now let us go to each and every type, that is interest on capital, interest on drawing, and let us pass the closing entries. Okay, let us pass the closing entries, whatever are pending for them, and then we will see how to calculate partners commission. Interest on capital closing entry. So interest on capital will be transferred to profit and loss appropriation account, because as I said, it is not an expense, it is like expense. So whatever like expense we say, those are all distribution. Okay, so see, interest on capital has a debit balance. This adjusting entry, interest on capital has a debit balance. So now we have to close it. So we will be crediting interest on capital account and debit profit and loss appropriation account. So while doing profit and loss appropriation account, we saw, right, profit, you have to write profit and loss fully, okay, in the exam. So profit and loss appropriation account debit. So in profit and loss appropriation account, just now we prepared the format of profit and loss appropriation. In that we saw that interest on capital will come on debit side. So to interest on capital. Now sometimes they may also call it as a transfer entry. This entry is known as a transfer entry. Okay, closing entry or transfer entry. So they will ask you ki interest on capital, calculate interest on capital, pass adjusting entry and transfer entry. So you should know what are the entries. Done. Profit and loss appropriation to interest on capital. Now let's go to interest on drawings. So interest on drawings is on page 1.14. Now interest on drawing is also, I am saying, like income. So it will go to profit and loss appropriation account. Now interest on drawing has a credit balance. I need to close it. So I will debit it. I will transfer it. So closing entry, or it is also known as a transfer entry. Okay. So entry will be interest on drawings account debit to profit and loss appropriation account. Done. Now let's go to next one. So loan to partner and interest on loan to partner. So interest on, see, loan to partner, right? This is loan to partner. So interest on loan to partner is like an income. So it will be transferred, is an income rather. It's not like income, it's an income. So it will be transferred to your profit and loss account credit side. Now interest on loan to partner, here you can see it has a credit balance. So let us close it. So interest on loan to partner account debit to profit and loss account. It will not go to P&L appropriation account. It will go to profit and loss account. Okay. Done. Now this is interest on loan by partner. So interest on loan by partner, if you see, it is showing a debit balance. It's an expense for the firm. correct? We have taken a loan from partner, okay, and we have to give the interest, that is firm has to give the interest, so it will also go to your profit and loss account. It is an expense, so profit and loss account debit to interest on loan by partner account is the close. Again, closing entry is also known as transfer entry. Remember that. If they ask you in the question transfer entry, don't get confused. I don't know. You know, it's a closing entry. Same thing. Okay. Shall we move to the next one now? Rent paid or rent payable to partners. Again, rent paid, rent payable is also an expense. So rent is having a debit balance, rent account is, so it will go to your profit and loss account. So profit and loss account debit to rent account. Now here interest on loan by partner and rent, okay, both are your expenses. They go to your profit and loss account. They don't go to profit and loss appropriation. So if you see, for both of this, we are not transferring this outstanding rent to partner's capital, and the rent interest is also not transferred to partner's capital. This interest, that is interest on loan by partner, is not transferred to partner's capital or current account. So that way you can link and remember that these two has to go in P&L debit, and we are creating a separate liability account for this also, that is outstanding interest on loan and outstanding rent payable. We are not transferring it to partner's capital account. Okay, that way you can relate and remember it. Done. Next is partner's salary. Partner's salary, again, partner's salary is like expense. It's not an expense, so it will go to profit and loss appropriation account. So profit and loss appropriation account debit to partner's salary account. Okay. Next, partner's commission. So partner's commission closing entry, again partner's commission is your like expense. This is like expense paid to the partner, so it will also go to profit and loss appropriation account debit. So profit and loss appropriation account debit to partners commission account. Done. Now we will calculate partners commission. Okay, so for calculation in this profit, and we are preparing a format of profit and loss appropriation account. Just copy this format first along with me. So this is by P&L account. So this is a net profit. Just write the amount. It is 1 lakh. Okay. Then by interest on drawings, you have 3 partners, X, Y and Z. So 10,000, 5,000, 5,000. So you have 20,000 total interest on drawings. Then 2 interest on capital, X, Y and Z. 3 partners, 2,000, 7,500 and 500. So total comes to 10,000. Then you have 2 partners salary, okay, X, Y and Z. It is 5,000, 5,000, 5,000. So total is 15,000. So this is an extract of profit and loss appropriation account, which we will be using it for our examples. Done. Now see here, 2 words you have to remember for profit and loss appropriation over here. See, for calculation, this is for calculation of commission, you have to remember 2 words. Okay, one is before and one is after. So before means before deducting or before including. After means after deducting or after including. Okay, we'll calculate now. So see here, first is partners commission will be 10% of profit before partners commission. So 10% of profit before partners commission means 10% of profit before deducting partners commission. Okay, so what are the meaning of the word before and after? Before deducting, or if it is an income, before including, and after means after deducting partners commission. So now let us see what is a profit before deducting partners commission. So profit, you can solve it along with me. Profit before partners commission. Okay, let us calculate profit before partners commission over here. So see here, how much is the profit? 1 lakh. Okay, plus 20,000. So 1 lakh plus 20,000. Okay, minus interest on capital 10,000 minus partner's salary 15,000. Correct? Minus 15,000. Correct? So how much do you get? 1 lakh plus 20,000 minus 10,000 minus 15,000. 1 lakh 20,000, 1 lakh 10,000, 1 lakh 95,000. Correct? So how much is the commission? So partners commission is equal to profit before commission 95,000 into 10 by 100. So that comes to 9,500. Now let's move to the next one. Now listen here. Partners commission is 10% of the profit after commission. So now here I need to calculate partners commission also on the profit after commission. Now here I have two unknowns. So let me just calculate profit before commission. I have already calculated it in case 1. So profit before commission is how much? Is 95,000. We have already calculated it in case 1 na? Same thing. So now whenever I have two unknowns, or whenever I need to calculate profit after commission and commission is also not there, and your profit after commission is also not there, two unknowns. So in that case, what will be my formula? So in that case your formula will be commission is equal to rate divided by 100 plus rate, okay, into profit before commission. Okay, so before deducting commission, commission on profit after commission. Correct? This is the formula we have learned it last year. So now partners commission is equal to rate is how much? 10%. So 10 divided by 100 plus 10 into 95,000. So 10 divided by 110 into 95,000. So you divide it, so you get the answer as 8636. Now see here, now there are different scenarios in this. Okay, this was simple, so we have learned this last year also. Now there are different scenarios. Now see case 3, partner's commission is 10% of profit after charging interest on capital. So what they are saying, whatever is the profit you have got, after charging interest on capital, I'm sorry, after charging interest on capital, so whatever profit you have got, okay, minus interest on capital, whatever profit you get, after deducting interest on capital, whatever profit you have got, partner's commission will be 10% on that. So let us go to your profit and loss appropriation account one time. See, your total profit is 1 lakh plus interest on drawing is 20,000. So total is 1,20,000. Okay. Now they don't want us to deduct partner's salary over here. Why? Because they are specifically saying after charging interest on capital. So 1,20,000 minus interest on capital 10,000 will give me a profit of 1,10,000. On 1,10,000 I will be charging a partner's commission of 10%. Okay, so that in some questions you will have such tricky questions wherein they will ask you specifically to calculate commission in this way. So that time you have to calculate it in that way. So profit after interest on capital is 1 lakh plus 20,000 minus interest on capital. I told you, no, after is after deducting and before is before deducting. So you got 1,10,000. So commission is 1,10,000 into 10 by 100. So you get 11,000. Okay. Done. Now next one. Partner's commission is 10% of profit after charging interest. Okay, after charging interest on capital. Nahi. After just correct this question. After charging partner's salary. Partner's salaries. Okay, so same thing. So instead of deducting interest on capital, now interest on capital should not be deducted because they are not asking after charging partner's salary. So profit after partner's salary. See the profit and loss appropriation. So we have 1 lakh plus 20,000 minus 15,000 is the partner's salary. 10,000 we should not deduct it. So 1 lakh plus 20,000 minus 15,000. Okay. So that is 1,20,000 minus 15,000. You get 1,05,000. So commission is 1,05,000 into 10 by 100. 10,500. Next one. Okay, 10% on profit after charging interest on capital and salaries. So both has to be deducted. So this is similar to case 1. Okay, case 1 but different wordings. So in case 1, if you see what were the wordings? The wordings were 10% of profit before partner's commission. That means whatever are the expenses before partner's commission, everything should be reduced. Here the wordings are specifically they are giving after charging interest on capital and salaries. So let us calculate the profit. Profit after interest on capital and salaries. How much is that? So we got 1 lakh. We have already seen, right? Plus 20,000 is interest on drawings. Your interest on capital was one was 10,000 and one was 15,000, right? So we have to deduct both. So in salaries is 15,000, so here we have to deduct both, because after minus 10,000 minus 15,000, so how much are you getting? 95,000. So see, different wordings, you are getting the same answer. Okay, so don't get confused. So it will be 95,000 into, so that comes to 9,500. Okay. Next, case 6. Partner's commission is 10% of profit after charging interest on capital but before charge. So here, see, last time in case 4, they were saying 10% of profit after charging interest on capital. Correct? They didn't say anything about salary. So we have understood that it is before charging salary. But here they are specifically mentioning it. So this is again similar to case 4, I think. Case 4 only, right? Case 3. Similar to case 3, different wordings. Okay, why we are solving all this? Because this type of questions come in the exam. Okay, though they are easy to calculate, but you should understand the difference between the wordings and the question for each calculation. That is the reason we are just solving simple example to understand the difference between all these things. So profit after interest on capital but before salaries. Okay, that is how much? 1 lakh plus 20,000. Okay, interest on drawing will be always taken. Okay, we are not saying that interest on, we have to always include interest on drawing before, because these words before and after are for expenses before charging interest. Okay, they are not if they have specifically told you कि before including interest on drawing, then we should not add it, otherwise it should always be added. Okay, now what is interest on capital? Interest on capital was 10,000, right? So minus 10,000, so we got 1,10,000, and so commission comes to 1,10,000 into 10 by 100, so you get 11,000. Done till here? Now case 7, partners commission 10% of divisible profit. So understand the meaning of the word divisible profit. So divisible profit is nothing but profit available before commission. So this is nothing but similar to case 1, but wordings are different. So what is a divisible profit over here? Divisible profit is 1 lakh, that was your net profit, plus 20,000 interest on drawings, okay, minus your salaries and your interest on drawings. Okay, so how much does that come to? 95,000, right? Divisible profit is 95,000. So now your commission will be 95,000 into 10 by 100. So you get 9,500. Now this is 10% of profit after charging interest on capital, salaries and partners commission. So specifically they are giving you after charging this, that and all. Okay, this is similar to case 2, after commission, profit after commission. Okay, see, when sometimes they may give you some additional information just to create a confusion कि after charging interest, after charging salary, partners commission. So whatever they are telling you, you just have to follow it. Okay, we will finish case 8, then you can take a break. Now see here, the problem is कि after charging partners commission, so whenever we are calculating partners commission and whenever it is on the profit after charging partners commission, then there are two unknowns. So we always have to use that formula, rate divided by 100 plus rate into profit before commission. So let us calculate profit before commission over here. We have already calculated it so many times now, right? You already know the numbers. So it is 1 lakh plus interest on drawings is 20,000 minus 15,000 minus 10,000. So you get 95,000. And since it is after partners commission, remember commission will be 95,000 into 10% is the rate, divide by 100 plus 10. So you get 95,000 into 10 by 110. So how much do you get? 10% of net divisible profit. So understand this words, divisible profit and net divisible profit. This you should know what it is. Okay, these are like not clearly given now what is divisible and what is. So if they give you 10% net divisible profit, this is nothing but profit after commission. Okay, after charging all the expenses and after commission, whatever we did it in case 2, same thing. Okay, so how much is the profit before commission now? So profit before commission is equal to 1 lakh plus 20,000, correct, minus 10,000 minus 15,000. So that comes to 95,000. Okay, so now profit, what is, how much is the commission? Is equal to 95,000 into rate, that is 10, divide by 100 plus 10. Okay, so again you get the same answer, 8636. Okay, now let's move on to the next one. So whenever they are giving you net divisible profit, your formula for this will be same, whatever you did it till now, no, same thing, that is rate. So formula will be divisible profit into rate divided by 100 plus rate. Okay, this will be your formula. Okay, because you don't know net divisible profit. So whenever you have to deduct the commission, you always have to take this formula, rate divided by 100 plus rate. Otherwise it will be direct, that is whatever percentage is given, use that percent, denominator will be 100. But if commission also needs to be deducted, then it will be 100 plus rate, denominator will be 100 plus rate. Okay, now the next one, partners commission is 10% before charging interest on capital, salaries and partners commission. So before charging everything means nothing needs to be deducted. Okay, so what is profit? Profit before charging everything, it is 1 lakh plus 20,000, that comes to 1,20,000. Correct. So how much is the commission? Commission is 1,20,000 into 10%. So you will have 12,000. Now let's move on to calculating interest on current account. So as I told you, interest, see, current account, we know it is a separate account which is similar to your capital account, and whenever you are following fixed capital method, you will be transferring or you will be posting all the entries in the current account related to partners commission, partners salary, interest on capital, interest on drawing, everything will be posted in the current account. In capital account, you will have only 4 entries, that is opening balance and closing balance will be there, then additional capital and withdrawal of capital. Only these 4 things will come in your capital account. Rest all the entries will be shifted to your current account whenever you are maintaining a fixed capital method. So current account is also similar to your capital account only. So for calculation, if there is a calculation, okay, how to calculate interest on the capital account, it is as given in the question. So in question, they will give you how to calculate the interest on current account. It will be, usually you won't have much complicated questions in this. They will just give you the balance of the current account and they will ask you to calculate the interest at the given rate. Okay. Now there are 2 things we need to see. Interest on current account is allowed. Okay, is allowed means what? Your current account, okay, in this case current account has a credit balance, same thing whatever you did it in the capital account, and interest will be given by firm to partner. Okay, interest will be given by firm to partner. Second is, sometimes if the current account has a debit balance, then interest on current account is charged. This is like interest on drawings when the current account has a debit balance. Okay, so in that case, this is a firm and this is a partner. I hope you know this is a partner. So this is a partner. Here interest will be given by partner to firm. The way partner gives interest on drawing, for current account also interest will be given by partner to firm. Did you understand this? So that is known as interest charged on current account, and when the firm gives it, it is known as interest allowed. Did you understand? Okay. Now journal entry is similar, okay, similar to whatever we did it in your partner's capital account. Now journal entry is similar to whatever is there in the, see, journal entry. So journal entry, there will be 2 types of journal entries. Adjusting entry will be of 2 types. So one will be for allowed. So when the interest is allowed, that is given by firm to the partner. So it is a expense for the firm. So the journal entry will be interest on current account debit to partner's current account. Now why do I know this is partner's current account and it will not go to the capital account? Because since it has interest on the current account, that means it is assumed that it is a fixed capital method, right? Because we are giving interest on current account, that means there is a current account. So it won't go to capital account, it will go to current account directly. Okay, that's why I am not writing partner's capital or current account over here. It is understood, right? Since there is an interest, it will go to the current account. Then if the interest is charged, so charge means it is paid by partner to the firm. So in that case, we are charging it from partners. So partners current account debit to interest on current account. Okay, and then closing entry for this will be, see, closing entry is interest on current account is debited also and credited also. So if the debit balance is more, then it will be profit and loss, appropriation account, debit to interest on current account. And let's say if the credit balance is more, okay, if the credit balance is more, then reverse this entry. Just write the journal entries now. Oh. If the credit balance is more, then reverse the entries. So whatever balance is there in the interest on current account, we have to transfer it to, then reverse. You have to transfer it to profit and loss appropriation. Just write this journal entries. Now we will solve one small example over here. Let me write down the example. You can write it along with me. Okay. I think you must also be having some space constraint over here. So just write it somewhere in the margin. That's fine. So see here, just to understand. So we have two partners. So A current account balance is 10,000 debit. Okay, and B's current account balance is 20,000 credit. Okay, and interest on current account both charged and allowed is 10% per annum. Okay, now see here, for A, how much is the interest? Interest will be, for A it will be 10,000 into 10%, so that is 1,000, and B it will be 20,000 into 10%, so that comes to 2,000. Now see here, for A, okay, for A it has a debit balance, so we have to charge the interest. That means A has to pay it to the firm. So if A is paying to the firm, your journal entry will be A's current account debit to interest on current account. For A it will be A's, we have to take it from A's, no? So A's current account debit to interest on current account, so it is 1,000. And for B firm has to give, it is allowed, so that means firm has to give because the balance is a credit balance, correct? So for B the journal entry will be, I'll write it somewhere here, interest, it is a firm has to give, so it is an expense for the firm. So interest on current account debit 2,000 to B's current account, because B has to get it, right? So current account credit. Now if you see interest on current account, see there is a debit of 2,000 and credit of 1,000. So interest on current account has a debit balance of 1,000, correct? 2,000 minus 1,000. So that will be so debit balance is more. So we have to transfer it to profit and loss. We have to credit interest on current account and transfer it to profit and loss appropriation. So closing entry will be profit and loss appropriation account debit 1,000 to interest on current. Now interest I am just writing INT, don't use those short forms, okay? I write it full, interest. Understood? Any doubts here? So now with this we finish all the transactions between a partnership firm and a partner. Okay, what are the different transactions we have learned, then what are the different type of calculations that are involved, and what are the different types of journal entries, and what should be the charge against profit, what should be the appropriation of profit.